Well, Village Main Reef has swung to a full-year profit, recording headline earnings per share from continuing operations of 26.79 cents. That's as the miner restored two of its mines to profitability. For a look at the numbers now is Marius Saaiman. He's joint CEO at Village Main Reef. Thanks so much, Marius, for joining us this afternoon. Well, looking at the headline numbers here, 112% increase in your earnings per share, 348% increase in operating profit as well. It's quite a turnaround that seems to have come through. Run us through the year that was for the company, because to emphasize here is that this was the first year of full ownership of your operating assets.
Indeed. Alishia, as you may recall, Village in its current form was really created in June of last year when Village acquired the Simmer and Jack Mines Limited assets from Simmer and Jack, which was really the Taolekwa and Buffelsfontein gold mine operations, as well as some other assets and liabilities. Included in that was the first uranium secured rand denominated notes and some of the FIU equity. So rightly, as you indicated, the first year of us owning the assets from an operational perspective, and a pleasing year, I think boosted substantially by a much higher gold price, which was very positive for us as a marginal or higher cost gold producer, and very good results from our Taolekwa operation, which we acquired from Simmer and Jack, and they obviously acquired the assets from AngloGold Ashanti in August of 2010. So our Taolekwa asset performed really well, and then Buffelsfontein started off quite well, and then as a result of certainly impacts of safety-related stoppages at the operations and the higher winter tariffs, made some losses during the June quarter, and so certainly a focus on turning the Buffels assets around during the September quarter and going into the December quarter. And then we also concluded the acquisition of the Blyvoor assets from DRD Limited with effect from the 1st of June. So the Blyvoor asset hasn't really contributed to our results yet, but very good results from Buffels and Taolekwa under the current circumstances.
Marius, it's Lindsay in Cape Town. I'm always interested in the company with Mr. Swanepoel behind the scenes, or right at the front of the scenes actually. And I'm just looking at your PR Machines rhetoric here. It says here, Village is focused on delivering value, it says, and in so doing will seek to deliver the optimum level of performance from its assets. Okay, that's great. You also say Village has continued, I'm reading from your statement here, to provide a unique private equity option in the resource sector. What do you mean by that?
Lindsay, what we're really trying to say is that we are not specific gold miners, and we've never held ourselves to be out to be that. What we believe we can do well is spot smart acquisitions, and I think we've demonstrated that through the acquisitions we've done at both the Simmers level, but also in terms of acquiring the Blyvoor asset. We believe that we can then positively impact on these assets through what we do as management team. And then in turn, I think what, the one area of our strategy which we've not really demonstrated successfully in relation to an asset is the ability to then dispose or, lock in the value for our shareholders once we've created that value. We have to an extent demonstrated that with our ability to dispose of the secured rand notes that we held under Mineways Solution and some of the FIU equity to AngloGold Ashanti, which allowed us to pay a very nice special dividend of 30 cents to our shareholders, which at that stage was equivalent to about 17% of our share price. So certainly from that perspective, we believe that that's a little bit more like a private equity than the traditional junior mining company that's looking for growth in terms of a specific asset or commodity class in ounces that we produce. So much more focused on spotting good transactions, impacting on them, and then locking in the value and returning that to shareholders.
When it comes to spotting good transactions, I mean, some certainly raised an eyebrow with the Blyvoor, mine takeover. I mean, many saying that you would assume that you've got your work cut out for you there. It's certainly an operation that didn't hold any merit for DRD Gold specifically. So what kind of time frame are you giving yourself, for that to contribute positively to your balance sheet?
Yeah. Alishia, certainly at the current sort of spot gold prices, even even old lady like Blyford is potentially very profitable. And it's all about right-sizing the cost structure for your production profile. Now, DRD did some very good things while they were the owners of the asset just before we acquired it by right-sizing the workforce in terms of a retrenchment program. It is now up to us as the new owners to impact on the remainder of the cost base. Now at Blyford, a large portion of our cost base is related to pumping costs, so power related and labour related as far as our power consumption and pumping costs are concerned. And we've got very specific plans in place to impact on that cost and to ensure that we create more flexibility in the ore body at Blyford. We are underground operators. We operate underground mines, and I think that is one of the distinguishing factors, for instance, between us and DRD, where they have certainly strategically indicated their their desire to have surface assets rather than underground operations.
Marius, it fascinates me. I mean, if you look at a company like, for example, going off on a tangent here, so forgive me, Aspen Pharmacare, it takes the assets of GlaxoSmithKline, some of the ones that are sort of considered to be non-core to GSK, and takes them over and makes a huge success of them. It's almost the same thing that you're doing at the moment. You talk about Blyford being an old lady. How many more old ladies are there out there for companies like yours to take over and turn around and be nimble enough to actually make a profit out of? Are there assets out there?
Lindsay, we certainly believe there is. I think that one needs to potentially just cast your net a bit wider than just the gold sector, although there are some very attractive assets, I believe, in that particular sector that is nearing the end of their sort of lives in the hands of the majors. But certainly in the platinum sector, there are some of these assets that do still have a lease of life in the hands of smaller operators. And similarly for coal and other bulk commodity assets where smaller operators with smaller overheads can still extract real value out of these assets.
So you're still identifying the opportunity out there. How are you weighing it up against the risk? Because of course you're uncovering all of this in a context where we've just seen what's played out within the platinum sector, Lonmin specifically, and now the fear that we may well see a ripple effect filter through to the other platinum miners and then gold miners as well. Yeah,
Alishia, certainly in terms of the strategy, it is relatively risky. I mean, and therefore, when we look at assets, the trick is not to overpay for them. So one has to pay a sort of level in terms of fair value that you pay for the asset that allows you to get superior returns if you get it right, assuming that you don't pin your hopes on a ever-increasing rand basket commodity price. So it really is not overpaying for assets, impacting on them very quickly, and then not falling in love with those assets. So realizing the value once you've created it. I think that's the sort of recipe, if you want to call it, in terms of the particular strategy.